Hello my friends, today we will be doing a fundamental stock analysis of Tata Motors. This video is going to be very interesting and informative, and if you watch it till the end, you won't need anyone else's opinion to decide on the stock. For this analysis, I'll be using Python code and Excel macros. This will save us our time on calculations, so we can focus only on interpreting the numbers and performing the analysis. So let's get started. First, let me open the screener website, and here we will pull out the Tata Motors detail. As you know, Tata Motors doesn't need any introduction. It's a leading company in India in the automobile sector. Deals in both passenger and commercial vehicles. Now let's discuss the upfront ratios presented on this website. The market cap of the company is 2,85,000 crores. The stock P is at 8.49 right now, which seems attractive, but we will dig deeper to get it confirmed. ROC is at 20% and ROE is 49.4%. We will also analyze this in detail later. At a first glance, these ratios look very impressive, but the devil lies in the detail. Let's dive deeper into the analysis before forming any conclusions. The current stock price is at 772, while its all-time high was 1179. This means the stock is already trading at 30% discount from its peak. We will discuss this in detail during the technical chart section of this video. So let's get it started. Let me open my Spider ID. Here it is. And here I need to change. And here in this code, I have to make the changes in the code URL. So here it is already Tata Motors. And also here we'll be having the name of the Excel file which will be saved into our drive. So now let's run the code. See, our code is executed and within some few seconds, this code has generated a file into this folder with all the details from the screener website. This file contains multiple sheets fetched from the screener website, but the data is in raw format. So we need to clean and format it to make it useful. So for that, we have already prepared some macros to do that task for us. So let's run our code. Here we go to developer and we open our macros. So our first macro is to format our numbers. So this is our macro and it's running. See, within few seconds, this macro has made these changes and it has also given the sheet names like what kind of the numbers are there in this Excel. So here we have the quarterly income statement. This one is the annual income statement numbers. Here we have the balance sheet. Here we have the cash flow statement numbers. Now our second step is to normalize the income statement and balance sheet numbers so we can easily analyze the trends. So for that, we have this macro already prepared. So we'll run it. Great. So this macro has prepared one more table in the quarterly income statement, one in the annual income statement and in the balance sheets, and also some charts to compare the trends. And our final step of the code is like we run our last macro, which will prepare the financial ratios for us. And which one is ratios and charts? Let's run it. I think it's working very fast. So yes, this macro has prepared two more sheets for us. One is the ratios and charts and another one is the financial ratios. So our coding part is done. Now let's start the analysis part. I made all the adjustments and the placements of charts so that the visibility of the charts is clear to us. So first of all, let's talk about the profitability ratios. So this is our profitability chart. So in this chart, we can see here the operating margin, the net profit margin, the return on assets and the ROE. So this chart denotes the operating margin. Operating margin shows how much profit of the company generates from its core operations before interest and taxes. So this trend line is showing uptrend, which is a positive sign. And our next trend line is net profit. Net profit indicates the final profit after all the expenses, taxes, and the interest. It is also at the upward trend, which is also a good part. And this green line indicates the return on assets. Return on assets measures how efficiently the company uses its assets to generate profits. This too is showing at a positive trend, which is great. This trend line shows return on equity. Return on equity shows the return available to shareholders, which is very volatile. As you can see, before this year, it was showing negative ROE and now it is sharp spiked. It may indicate that the company is operating at high degree of leverages. So now next, let's discuss the asset turnover ratios. These measure the efficiency of a firm to generate revenue or sales using its assets. So we have two measures here. One is fixed asset turnover ratio and another is total asset turnover ratio. Fixed asset turnover ratio is going upward and currently our fixed asset turnover ratio is at 0.97. This means like every 1 rupee invested in fixed assets, the company generates 0.97 rupee of sales. This one is total asset turnover ratio and it is at 0.29. So this indicates 1 rupee invested in the company in total assets is generating 0.29 rupee of sales. There is a huge gap. So it means Apart from fixed assets, other assets are not performing well. Now let's move to solvency ratios. Solvency ratios reflect the company's ability to meet its long-term obligation and financial stability. To measure, we have three indicators here. One is debt to asset, debt to capital, and debt to equity. Debt to equity shows the proportion between debt and equity. Like currently it is at 1.26. It shows like at 1, debt and equity are at equal level. But now at 1.26, it shows debt is more than the equity. And this ratios lower better. It is at downward trend. So it means the company is reducing its debt. And so as these levels are showing the debt level and these all are going at downward trend, so this is a good indication. So to check the liquidity ratios, we have one ratio here as an interest coverage ratio. This shows how much times of interest payment is the company's operating profit. Like at this level, the company's operating profit is 5.96 times than the interest. Means like if the interest is 100 rupees, then the profit is 596 rupees. Increasing this level is a good indication. And the last ratios which we have to check our liquidity is the working capital ratios. So in this ratios shows how the company is managing its working capital requirements, like receiving payment from customer to whom the sale made on credit, making payment to vendors, and how many days to make ready for new sales. The major indicator DPO, days payables outstanding, and inventory days, in which average time to convert inventory to sales, and DSO, average time to collect payment from customers. And this shows the cash conversion cycle, the total cash conversion cycle to process all these working capital events. And here, the cash conversion cycle is at negative. Negative days cash conversion cycle indicates that the company collects its cash from customer before paying the suppliers. This shows that the company's working capital management is effective. Now, let's move on to the sales and profitability trends that we can see. First, let's check the annual income statement trends. So, here we have our trends, which we can easily compare. Like the base year for all the components starts from 100, and here we can see the trends. So in this trend line, we have sales, expenses, operating profit, interest, net profit. So sales, we have at upward trend from last 4 quarters with an average of 21%, and so in line with our profit margins. But as you can see, our net profit are increasing disproportionately with the sales. So this also indicate that the company is operating at high leverages. Let's discuss the quarterly income statement trends also. So this one is our sales. The sales are at declining phase from last 2 quarters, and that declines our net profit very disproportionately. This is because for the same high degree of leverage. It talks about the risk profile of the company. Leverage amplifies the impact of sale changes on profit. Consider leverages as a gears. We have 3 degree to measure leverage. One is operating leverage for this one, and the financial leverage and the combined leverage. Operating leverage reflects how change in sales affects operating profit. It based on the company's cost structure. Currently, our operating profit is at 3.3, indicating 1% increase in sales leads to 3.3% increase or decrease in operating profit. Okay. And the let's check the financial leverage. Financial leverage measures the impact of debt on net profit. Higher financial leverage indicates significant debt use. This increases earning potential but also increases the financial risk. Currently, our financial leverage is very high. It is at 12%, which indicates 1% increase or decrease in operating profit leads to 12% change in net profits. So this is the reason like why you are seeing the instant spike in the net profit while little change compared to this trend. This is the reason you're seeing the instant spike. And the combined leverage is the product of operating leverage and financial leverage. This shows the total impact of sales changes to net profit. So currently our combined leverage is very, very high, which is as 40 level, which is as very risky level, which means every 1% change in sales make the 40% change in the net profit. So with this, you get the idea. Like leverages plays a very critical role in shaping strategic management decision by the top executives. By analyzing this table and the past trend numbers, you can get insight at how management effectively adjusts its strategies at the right time to achieve its objectives. I have also calculated the leverages over here. So quarterly operating leverages are also increasing. Financial leverage is decreased at rapid rate, and combined leverage is at 6.5. It is decreasing, but still at a very risky level. So this is what you can interpret about the riskiness of a profile of a company. Let's move on to the balance sheet. and the cash flow numbers. So we have already discussed the ratios of solvency, but just check the trends of reserves and the borrowings. So this is our borrowing trend line. So our borrowings are decreasing, are at downward trend, and our reserves are increasing. So these both two insights are at the positive side. So let's check the cash flow statement. The operating cash flow is positive and on an upward trend. The net cash flow also remained positive over the last year, which is great to see. So now let's analyze the shareholder pattern. The promoter reduced their holding by 4% last quarter, which isn't a great signal. However, this selling has been absorbed by the public and the FIIs. It says when promoters selling the holding means they are considering their stock price at an expensive level. Last but not the least, let's check the technical chart aspect of the stock. This stock is already corrected by 30% from its peak and is now trading at 774. I want to bring your attention here. If you closely examine this table, the most comparable figures to last quarter results are from June 2023. And if we check the price in June 2023 and consider this price range as a fair price range for the stock, then this current price value seems overvalued. One positive development since then is the company has reduced its borrowings, which has lowered the interest payment by 29%. But considering the decline in sales from last quarter and the company's high leverage, the stock seems overvalued. Based on my analysis, the downward trend in sales and higher leverage increases the risk, and the stock may see further correction mode. The decision is yours now. I have shared all the analysis and numbers. Now it's up to you to decide when and whether to buy, hold, or to sell the stock. That's all for today's video. If you want me to make any video on any certain stock, please do mention in the comment section. I'll see you in another video with more analysis. Until then, take care and goodbye.